Hello, folks. It is Tuesday, October 3rd. It's about 3 o'clock in the afternoon on the East Coast of the United States. In this video, I'm going to talk about gold. Now, isn't that a big surprise? I was out running some errands yesterday, and I was feeling kind of poopy about the state of the world. And then I realized that all of the potential paths going forward lead back ultimately to gold as money. And I started feeling pretty optimistic. So let me share my screen here and we'll jump right in to this video. So the path going forward, we're going to have some ugliness getting from A to B, but again, ultimately, all the potential paths going forward lead back to gold as money, in my opinion. So let's jump right in here. Gold, the path forward. Elevator speech. So I was thinking yesterday, it's like, if I was trying to explain to somebody in 30 seconds or less, where are we at? Where is the economy at today? And then, that's what you do in an elevator speech. In 30 seconds or less, you need to catch their attention and, relay your idea very quickly and effectively. And so elevator speech on what is the state of the global economy. In my opinion, we are at the end of the Keynesian experiment. And that's how I would describe in a single sentence, that's how I would describe the state of the global economy right now. We are at the end of the Keynesian experiment. Doesn't matter which country you want to talk about, each country is a little bit different, but in the big picture, all of the countries are at the end of their Keynesian experiments. They're all on fiat currencies. Everywhere in the world right now is on a fiat currency. We could look at Zimbabwe's got a gold currency in addition to their paper money. But ultimately, all of the countries right now are on fiat currencies. So the only question is what comes next? It's like, okay, we're at the end of the Keynesian experiment. We're currently in the death throes. That's what we're seeing right now is the debt with rising interest rates, collapsing debt globally, collapsing bond markets, collapsing real estate, etc. The pension plans are collapsing as well. We just don't get much feedback on that because they're able to hide it in the back room. They don't have to report publicly the current state of their pension plans. So, and retirement plans, big institutional funds like CalPERS, et cetera. They don't have to report to us, all of those bonds we bought at 0% interest. Well, they're worth about half what we paid for them. But yeah, anyway, they don't have to report that kind of stuff. So we're at the end of the Keynesian experiment. The only question is what comes next. And again, in my opinion, all paths at this point lead to gold as money. And so let's look at the different paths. What are the possible paths going forward? Well, there's an outright economic collapse. That basically the wheels come off the bus. The wheels go round and round until they fall off the bus. Well, rebuilding from an economic collapse will require honest money. Physical silver, physical gold. That's what we will rebuild or build anew a strong economy after the current economy collapses. And unfortunately, in my opinion, we have to collapse the current system. There is no transition from A to B that doesn't involve economic collapse. And, I hate to say that. I'm generally an optimistic person, but that's the way I see the economic world right now. There will be an economic collapse between here and there. And we're in the midst of it right now. So rebuilding from that collapse will require physical silver and gold. That's what we'll build the new economy on. And the only question in that scenario will be, have you got some? Have you got some gold? Have you got some silver? And it's a yes or no, it's a yes or no question. You either do or you don't. So another path going forward, inflation, stagflation, hyperinflation. And of course, those are all just varying degrees of the same phenomena. And this is already baked into the cake. And two factors in particular, energy, we've got analysts talking about $150 a barrel oil. And so you think inflation's bad today, wait until we're dealing with $150 a barrel oil, and they've already emptied the strategic petroleum reserve. We're down to a 20-day supply. And so they're not going to, soften the effects of rising oil prices by draining the SPR. They've already done that. They've already drained the SPR. So that possibility is done with. And then the other factor that makes me say that inflation is already baked into the cake is food inflation. As I explained in my last video, we're eating last year's food, and we have yet to pay for the cost increases in food for this year's food. Too many foods in that sentence, but I think you understand what I mean. We've lost grain output from Ukraine. We've lost fertilizer output from Russia. We've lost shipping capacity. We've had the destruction of 15 million chickens, a whole bunch of turkeys, a whole bunch of pigs. We've had 230 plus food processing plants that have mysteriously caught fire, or at least one of them, an airplane crashed. Now, isn't that convenient? An airplane just happens to crash into your food processing plant. But anyway, 230 plus of those. So anyway, food inflation is baked into the cake, if you'll pardon that pun. All of these flavors of inflation ultimately lead to economic collapse. And, again, have you got gold? As I was thinking about recording this video and food inflation in particular, this song popped into my head because, in my opinion, you ain't seen nothing yet, baby. If I could sing, I'd sing the song. So, and I'm probably dating myself by, this is 1974. Let's see, what was I at that point? I'm about 11, I'm about 11. I guess I was a rock and roller as a preteen, because I remember that song when it came out, you ain't seen nothing yet, ain't seen nothing yet. Here's something you're never going to forget. And I none of us will ever forget what we are currently in the midst of, will form our lives going forward. Certainly at my age, I just turned 60, that the rest of my life will be living in the result of events that are currently in progress. And I'm unfortunate that I have to say that. But so anyway, let's keep rolling. So rising interest rates. Well, currently that's the path we're on, or appear to be on. We got the Fed saying, we're going to have to keep raising rates to deal with inflation. We want to get back down to the 2% target, which of course is bullshit. They're not going to get down to 2%. They're not serious about fighting inflation. If they were serious about fighting inflation via interest rates, they'd have to immediately put interest rates at least 12%, and actually probably more like 15%. To get ahead of inflation, because we're currently having at least 12% inflation and probably more than that. So anyway, rising interest rates, if they continue on the current trend, that will lead to a debt collapse, which is happening already, which leads to an economic collapse. And then we're right back to, have you got gold, yes or no? I saw an article just today, evidently yesterday, Rick Santelli he's got a show on CNBC, I think it is, Face the Money or something like that. And he was talking about interest rates on the 10-year note reaching 13 or 14% in the next 7 years. So remember in my video on Sunday, I was showing that in 1981, the yield on the 10-year note reached almost 16%. And so, basically Rick is just predicting a return to historic levels in that vehicle. So again, rising interest rates, collapses the bonds, collapses real estate, et cetera. So rising interest rates lead to a collapse of the economy. A pivot to lower interest rates. Okay, so some people still thinking that the Fed's going to pivot. Well, let's say that they do. Okay, they're going to jump in and save the economy by returning to low interest rates. They're going to print up a bunch of fiat currency. Well, this is the other side of the coin, or this is where that path leads. Basically, hyperinflation. So, right now we've got inflation. If they do this, it will lead to hyperinflation, which, leads to economic collapse, et cetera. And so, I'm not expecting them to go down this path. There are analysts out there who still talking about a return to lower interest rates. I don't think we'll see that. I noticed a headline this morning, somebody suggesting that the new target for the Fed, instead of 2%, will be 3 or 4%. That the baseline inflation rate will be 3 or 4% instead of 2%, basically acknowledging that ain't never getting back to that 2% target, or if they do, it's a long way down the road. Here's another potential path. Well, global debt collapse, that's already happening. It started in December of 2021 when Evergrande, the Chinese real estate developer, defaulted on about $300 billion in debt. And that debt was not isolated to China. It was Western investors, Europe, America, et cetera, $300 billion worth. And so, in my opinion, when we are looking back on these current events, we will mark December 2021 and that Evergrande default as the start of the global debt collapse. And of course, since that point, Evergrande has declared bankruptcy and international bankruptcy, Chapter 15, I believe it is, because multiple countries are involved. And then a second large real estate developer in China has also, I'm not sure exactly where they're at, whether they've actually declared bankruptcy or they're just in default. But we've got at least one more major real estate developer in China in trouble. Obviously, global debt collapse, that's collapse, like I was saying, collapse of the bonds, collapse of the assets that are held by pension funds, retirement funds, et cetera, which pays pensioners, Social Security collectors, et cetera. Anyway, when they lose their income, or the 65-year-old goes to retire and there ain't nothing for him to draw on, that's economic collapse. So, and again, this is already happening. We're already in the midst of a global debt collapse. So, stock market collapse, are we seeing that yet? I haven't looked at the stock market today. I don't care to look at the stock market on a daily basis. Last time I looked, it was headed lower. The stock markets, by any historic measure you want to choose, is terribly overvalued. And at some point, the stock markets will revert to the mean, and the mean is far lower than it is than current levels. And so at some point in our future, we've got a stock market collapse will contribute to an overall collapse of the economy. And again, in that scenario, you either got gold or you don't got gold. Bank failures and bank bail-ins. We've probably got at least one more round of bank failures ahead of us. Higher interest rates are collapsing the value of bonds. And of course, that's what numerous banks, a lot of banks consider to be their assets. It's the bonds that they have invested in. Of course, I put that in air quotes because I don't consider bonds a good investment, even though, internationally, U.S. Treasuries are considered to have zero risk. That's not my position on bonds. And so anyway, another round of bank failures, bank bail-ins. The laws were put on the books. Was that in the mid 90s? Here in America too. So you go look it up. they changed the laws here in America, and this occurred after they did the bail-ins in the Greek banks. I think at least one other country in Europe had bank bail-ins, and bail-ins where they decide, oh, bank, we're in trouble as a bank, and so now your asset, your savings account, your checking account, what you consider to be your money, well, we're going to declare that it's now our money. Yeah, that's a bank bail-in. I heard an interview. Oh, actually, it was Bob Moriarty. Somebody in an interview was asking Bob Moriarty, when will the young people, the 20-somethings, when will they understand bank bail-ins? And I love Bob's reply. He says, well, as soon as their bank account gets bailed in, they'll understand what a bank bail-in is. And that's a hilarious answer, and hopefully we won't see that. But the laws are on the books here in America. They can bail in our bank accounts. Well, I've significantly reduced my exposure to the banking system. Basically, I've got enough money in my bank account to pay my monthly bills, and I don't keep a lot of money in the banks right now. So anyway, bank failures, bank bail-ins, economic collapse, got gold. Another possible path going forward, and that's one of those words that you don't say out loud on YouTube because the censors are censoring. But this is historically, this is what the globalists try to do when they need to reset the economic system. So basically, they need an external boogeyman to blame the economic collapse on, because they don't want to accept responsibility for, well, in this case, Keynesian theory is bullshit. It was a bad policy when it was thought of back in the mid 1930s. It's a bad theory today. And unfortunately, we've had 50 plus years of implementing that bad theory. They came up a couple of years ago, they came up with MMT, modern monetary theory, which is basically just a relabeling of Keynesianism. It's the idea that you can print money to infinity, as Buzz Lightyear said, to infinity and beyond, that you just print up as much fiat currency as you want and go out and spend it, and all is good. That's modern monetary theory. And again, it's bullshit. And so anyway, this is one of the things they're trying to do to us today. Look around at geopolitics and world events. This is one of the things, this is one of the conditions they're trying to create today. There are people smarter than the globalists, one in particular, and he's not playing along with their game. And it's funny, it's actually kind of amusing. The globalists are getting frustrated with this individual because he won't play their game. He won't walk down the road. He won't willingly walk down the road that leads to this. And I'm guessing you know who I'm talking about. So, and then of course this event would be coincident with or leading to part of an economic collapse, wherein again the question becomes, have you got gold? Yes or no? So this is my advice. I always try to provide, call to action, whatever you want to call it, advice. And of course, I'm not a financial advisor. I'm not an investment advisor. I can't tell you what to do with your money, your investments. I would suggest something for you to consider is that you buy gold. And of course, when I say gold, I mean silver and gold, and actually more silver than gold. My opinion, you weight your precious metals portfolio heavily towards silver over gold, but buy both. Buy it now while it's available and it's cheap. Premiums are the lowest they've been in 12 months or more. Well, not 12 months, at least 6 months. Premiums are very low from where they were in the past year. brokers have lots of gold and silver available. There's even junk silver available. And that's where I suggest, if you're buying physical silver and it's available and the premium is not too high, buy junk silver. That's always my first choice. When I go to my local coin dealer, that's what I'm looking for first, is junk silver. But, I always consider where premiums at, because, 6-8 months ago, premiums on junk silver were kind of ridiculous, and it was hard to find too. So that's your first choice. You can buy gold now while it's available and cheap. You can buy gold later when it becomes expensive. It'll still be available. You might have to go on a waiting list. You go to JM Bullion online or AppMex or your local coin dealer, and they'll say, well, I put you on my list. I'll give you a phone call. In 6 weeks or so down the road, you may be able to put your hands on some physical, but you can do that. Buy gold later. It'll be expensive. Premiums will rise. The price will rise. Or you can wait until gold is no longer available and live with your regrets. You'd be looking back and you'd be saying, oh, poop. I wish I had, gnashing of teeth and all that kind of stuff. So 2 ways to buy physical gold. First, in my opinion, this is the best way. You take cash out of your bank. You go to your local coin dealer. You buy physical silver, physical gold. You tell them you want the form of silver or gold that has the lowest premium to spot price. Don't buy premium coins. Don't buy proof coins. You want to pay the lowest premium possible over spot price. And if you don't know what that means, don't worry about it. Go to your local coin shop. He'll explain it to you. And if somebody tries to talk you into premium, limited edition coins, proof coins, collectible coins, that's the slab VS 72 or whatever it is, now walk out, find a different coin dealer. You don't need premium coins. What you need is bullion. You want the most metal for the least amount of money. So that's method number one. Now, method number two is for protecting your tax-advantaged retirement accounts. So most people, hard time convincing them that hard economic times are coming, much less that the economy will collapse. People still talking about soft landing, which it always amuses me when I see that term. Soft landing, going to have a soft landing. The Fed and the Treasury, they're going to glide this airplane in for a smooth landing. Well, good luck with that. So the way to protect your tax-advantaged retirement accounts is by moving that money, at least some of that money, 5 to 10%, into a precious metals IRA. Now, the IRS is very restrictive about how we handle our tax-advantaged savings. And so in the case of a precious metals IRA, they don't let you take physical possession of your metals. So they have to be held by a third-party custodian. So you set up your precious metals IRA, you transfer money into that account, you purchase physical gold and silver through your custodian, and then those precious metals are vaulted for you in your name. And it's the same as right now you've got stocks, bonds, whatever it is you have in your tax-advantaged savings. You don't have those pieces of paper physically in your hands. They are held by your custodian in your name. And it's the exact same thing with a precious metals IRA. Third-party custodian holds your precious metals in your name. IRS requirement. You don't have any choice in that matter. So in the description below this video, there's a link to Augusta Precious Metals. That's my first choice for a gold IRA company. Reach out to them. They'll set you up with an information kit. They'll connect you with a representative who can answer all your questions. They're not going to put pressure on you. They'll work with you for as long as it takes for you to decide whether precious metals IRA makes sense for you. Don't dawdle, because we are in the midst of economic collapse, in my opinion. But do something, protect yourself. That's all I've got in this video. I had fun. I hope you enjoy it. I'll talk to you in the next one.